Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Friday, July 21st. Nasdaq is continuing showing signs of weakness despite the fact that today we were gapping up quite nicely during pre-market. In order for us to understand how this week has been performing, we really need to see the daily uptrend that got denied yesterday with a 2.30% in the red. And before, we were already seeing these kind of topping tail doji candles up here at January 2022 levels. If we go down to the 30-minute chart and we see the last 5 days, we really see two nice big days to the upside. The chop around Microsoft and Apple. This was Microsoft Day, and this was Apple news regarding their ChatGPT bot. And then yesterday's big sell-off continuation, and now today more chop. And look at this pre-market activity. We were gapping nicely during pre-market. We were holding yesterday's low of day, pre-market low, and we bounce of settlement and yesterday's print close. And then, well, two big rejections of pre-market high around this 30-minute resistance that I was watching. I was watching 3 levels yesterday. From yesterday, this is one of them, the big late spike into the afternoon. The consolidation here with two big topping tails candles, and then the opening print and also last week high. So let's go back to the 1-minute chart. Well, we got these two nasty openings. And more than that, I've seen throughout all this week big, huge blocks that I haven't seen in a long time. 200, 300, 250, 175 blocks on the NQ futures. Those are huge money. And I think my understanding is that due to the rebalance of the Nasdaq 100 at today's close, remember that today's after close, Nasdaq is rebalancing their weights. And I think due to that, a lot of hedge funds, big players, banks are adjusting their positions. So we are seeing huge players, huge selling into that. Why selling? Because Apple, Microsoft, Nvidia, Tesla, Google, Amazon, Meta, all those are losing weight. They are being adjusted in order to balance for those stocks that are less weighted in the index. So I think Apple is losing like $7 billion or even $10 billion of market cap in the weighted, not in the actual stock. And I think that's why we're seeing this huge selling pressure. They are selling, they are adjusting to the new order of weighted in the Nasdaq. This is not something bad, but it's something to take into account because this has only happened a couple of times before in the history of the index, and it's worth taking into account and analyzing in detail. So first, we are seeing this kind of move, really trending lower, and then we tried to grow higher, but we are still below point of control on the day at yesterday's close. So right now, the only thing that happened is that we adjusted this huge pre-market overnight inventory, and we just balanced that. It was a beautiful gap close, and look at this nuance, look at this detail. These kind of things are the ones that are worth learning when performing technical analysis. This was the level to watch for a bounce. Gap close, and then what? That's the real question. Now what? Well, we have to pay attention to the big ones to see how they are performing on the day, because right now the Nasdaq is pretty weak. It's barely flat, 0.02 in the red. S&Ps are 0.20 because financials, banks are mixed to bearish today. Quite a lot of red on the banking sector. So let's see a quick review of Apple and all the big tech stock on the Nasdaq, from the daily to their quicker, faster time frames. So Apple, look at this, all-time highs. I have this daily level and two red candles rejection after all-time highs, big top in tail. How it's performing today? Weak. Today is quite weak. Yesterday and the day before, we got the news, the rejection, the retracement, push, retracement. I mean, Apple is not willing to go higher. And we have to really pay attention to this 192.52 for us to really see if there's a gap. This is the daily gap. If there's a gap fill on the daily towards the downside. Without Apple and Microsoft, the index will not go higher. Microsoft, now this is the Microsoft day with huge news and then rejection. Yesterday, chopping around after Apple news, and now complete retracement in 3 trading days. The same descending triangle into a gap is around 335 on the daily. They both, Microsoft and Apple, look really bad up here, so really careful. Tesla, after earnings, gap left behind, and now that we are not holding this pivot, we should adjust for the big sell-off. I think below this 260, below today's hot, there's this gap and a lot of gaps left behind. Who knows where Tesla is gonna bounce or it's gonna find some kind of support. But overall today, since earnings, I mean, more people were heading towards 300, but look at this high, 299.29. So we barely hit the 300 target that a lot of people were focusing on, and since then we've been pretty weak. Right now is 13% since that level. Amazon on the daily, it's looking weaker than others. It started already rejecting these highs. It's a pullback. It's a higher low from now, but it's quite difficult to really understand this kind of price action. The thing is that we are already again in this range that we got before, trying to breaking up to the upside. Back to the range, we might see some chop around here like this, and then finally breaking down. That's a possibility. If we hold this kind of pivots, this kind of area, we might see a rebalance and then going higher again. But right now, we need time, we need patience, we need next week in a lot of these stocks. Google, we broke to the upside and we got instantly rejected. These candles are not a joke. Look at this rejection, pushing higher yesterday and being smashed down heavily. Today, super choppy, go down, go up, and go down. So there's a lot of weakness on all these stocks. It's due to today's rebalance. We should wait to answer that, but for sure, next week with FOMC on Wednesday, is gonna be also quite volatile. Nvidia, all-time highs 480.88, and right above the gap from 13th of July. If we go to the 5-minute chart, we can see again today a big sell-off, 1.80 on the day in the red. And Meta, it's also super weak, minus 2.84 on the day. And look at these two candles. We can remove that one, not that one, but this was the area that I was watching for a bounce. Don't get me wrong, we can bounce of that upper band of the area, but that would be quite a disaster because most probably we would end up doing the lower high up here, and who knows, we also need time for this. So going back to the index and seeing this doji today, again, like this one, we are starting to see some signs of weakness up here. That doesn't mean that I'm not bearish yet. I need to see the bounce and what kind of bounce, at what level we continue trading. If we start seeing these kinds of lower highs coupled with lower lows down here, I might reassess my understanding and my sentiment, but I'm watching this low, this consolidation up here, and last week's low, and this week's low. This week's candle is going to be a doji, a topping tail, quite signaling a huge rejection, so be careful with that. And this week's low is going to be around here, and then most certainly we are going to see again 15,000 as a possible support. What else? Apart from the Nasdaq, the dollar is continuing pushing 0.30 on the day, and quite interesting because yields are mixed sentiment. The 2-year yield is in the red, but the 10-year is in the 2-year is in the green, that the 10-year is in the red, meaning that the 2-year, the shorter term controlled by the Fed, being in the green means hiking, higher interest rates in the short term, and in the 10-year, obviously a lot of people is expecting next year start cutting rates from the Federal Reserve, and a signal for bulls. High-yield corporate bonds are quite in the green after these 3 days last week. Around here, we are approaching 75.55 breakpoint, and treasuries are also in the green, meaning that yields are not expected to continue higher, and that's why treasuries are increasing in value. You have to also see this bonds market to try to understand what's the outlook, because that coupled with the fact that dollar is down here, signaling maybe a lower high and start trending lower below parity 100, that would mean that stock market might see a relief on this selling pressure. Who knows? And also banking sector. XLY today is in the green, barely in the green, but financials are in the red. And we need to see banks doing good because S&P is quite heavy on that. Nasdaq doesn't have any kind of banking stock, but banks and financials overall are supporting the idea of avoiding recession. And that's worth following up on that. Last thing that I would like to see is, let me show you the sector performance on the week, because I'm seeing quite an interesting thing. Utilities, healthcare, and staples are up here. If we expand to the 2 days, utilities, healthcare, energy, and staples. Days, utilities, healthcare, staples. Defensive sectors are starting to push higher, to move higher, in a sign that I understand is meaning that the rotation from Wall Street towards defensive is at least starting to happen. On the 5-day performance, XLV healthcare 3.56. Utilities and staples are also up here. And you can see that consumer discretionary and communications are down here, signaling that maybe the consumer is not as strong as we may thinking initially. So quite interesting to see that. Let's go back to the Nasdaq and see if we can. Now we are still above settlement at prior close level. I don't think today is a day, Friday, to really continue trading a lot. So analyze yourself, analyze your positions, and your overall performance on the week, because maybe it's not worth continuing trading today. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, support the channel and subscribe, because I upload videos every single day for market forecast, market updates and market recap. I appreciate your time as always. I hope you had a decent week. It was quite a volatile, choppy and tricky, difficult week of trading. Next week, FOMC, and after rebalance, we may chop around also, but who knows? We have to be here day after day to really follow these markets, experience those markets and the price action to really gather the sentiment. That's all. Thank you for your time. Remember that discipline and risk management are key for your success. Stay safe, everyone. Have a nice weekend and see you on Monday.